Today, I'm sharing a buy and hold forever investment in my portfolio, and that is FXAIX. It's the Fidelity 500 Index Fund. So, funds that track the S&P 500 are the cornerstone of many portfolios and is an investment choice that many choose because it's nearly impossible to build a portfolio that will outperform the S&P 500. This is something that even Warren Buffett advised his own wife to do. So, as I said, the investment tracks the S&P 500, the 500 largest companies in the US, based on market cap. Investing comes with risk and some setbacks at time, but overall, betting on this group of companies, in my opinion, is a solid choice. So, any funds that you don't need to tap into quickly, I would make sure to have them invested. My investment into FXAIX is for retirement in my late 60s. For shorter time frames, you'll want to stick to a high yield savings account or CDs. So let's take a look at the details of the fund. It is the Fidelity 500 Index Fund. It's categorized as a large blend. It was created back in 1988. It has an expense ratio of 0.015. The current price is $181.52. There is no minimum to invest. And currently, the top holdings are listed here. We have Microsoft, Apple, NVDA, Amazon, Meta, Berkshire Hathaway, Eli Lilly, and Broadcom. Let's take a quick look and see where Tesla falls currently on the list. They are down to number 13. Just wanted to take a look at that because Tesla was part of our Mag 7 until recently. While here on my journey to build wealth, back in September, I decided to incorporate this fund into my portfolio. So far, I'm up to 700 shares. And I received my first quarterly dividend for 2024 last month. So, as I said earlier, this fund is based on the market cap of the company. So, right now it is tech heavy because those are the largest, most stable companies. As companies grow and things change, so will the most heavily weighted companies in this portfolio. For example, like we just looked at with Tesla dropping out of the top 10. So, I chose to do FXAIX in my IRA at Fidelity, but some other ways that you can get exposure are through VOO or SPLG, both which have low expense ratios, but FXAIX has the lowest at 0.015. And what an expense ratio is the amount that is charged for management and other fees on funds like this. Expense ratios, 0.5% or something like that, may seem small and insignificant, but you have to realize that these type of fees eat into your investment. So we try to keep them to a minimum because we're trying to build up our share sizes and receive our dividends, reinvest those dividends, and continue building up our portfolios. So we don't need to be hindered with unnecessary fees. So be mindful of that when you're choosing what ETF or index fund you're going to invest into. So, as I said earlier, the average rate of return of the stock market is 10%. But over the last year, this fund is up 26.27%. The S&P 500 is up that percentage. And year to date, it's up 10.31%. Now let's take a look at my current position. I have 700 shares. The current price is $181.52, but my average right now is $161.83. I only started investing into this fund in late September of 2023. I'm currently up $11,424. 10.08%. And my quarterly dividend that I received on April 5th was $366.13. I'm not sure if I showed this earlier or not, but the average rate of return for the S&P 500 for the stock market is 10%. but that can be and will be affected by inflation. I'm filming this on May 13th, and today the S&P 500 ended the day relatively flat due to concerns about rising prices ahead of inflation data that is going to be coming out this week. Here's a look at the economic calendar of events for this week. So the PPI data is coming out tomorrow, the 14th. And what that is it measures the price of goods and services. I know one thing that falls into this category that has been a strain for me is car insurance. On Tuesday, Federal Chair Jerome Powell will be speaking. And on Wednesday, the inflation data will be coming out. So, do you invest into an index fund or ETF that gives you exposure to the S&P 500? What percentage of your portfolio do you allocate to this type of investment? Drop me a comment, and if you haven't already, don't forget to like and subscribe. So, as I said, for me, this is a long-term investment, definitely one of my buy and hold forever positions in my portfolio for retirement as well as in my taxable accounts. So here's a bit more information for you to have for the week ahead. Some notable companies with earnings this week include Rumble, which is coming up tomorrow, and some larger market cap companies are Walmart, Home Depot, and Baba. So thanks for watching. I'll be coming to you soon with more stock market updates.